Yeah, I think that is a distraction. So
yes. We are live, sir.
okay.
You can go ahead, sir. You can introduce and
Okay.
Yeah.
Good evening, all. I'm Dr. Vimal Kumar, and this is a live session. Please post your question in the chat box, and I will try to answer your queries. Just I want to talk about, because we have some question in advance, and there is a question by Mr. Ankit Raj about future scope of economics in India for BA students and road after BA. Okay. So first of all, let me give you a very, very generic answer. You know, for economics student particularly, the undergraduation gives you a lot of opportunities. One thing that is very specific to economics is Indian economic services. So Indian government in many departments, they need economists, and for that Union Public Service Commission conducts a special exam called IES entrance, IES exam, like civil services exam. This is also conducted, I think, in 3 steps. First preliminary exam, then main exam, and then you have the interview. And this is after that students get selected candidates get grade 1 job in India. Other opportunities, of course, civil services, economics has been considered by many scoring subject. So you can select economics as your subject and appear for civil services exam. Another avenue is Reserve Bank of India. They also hire economists, but for that, I think bachelor is not sufficient. One has to do a master degree. So BA is just a beginning. If you think of from economics perspective, you have to cover a little bit more. And I think doing a master is definitely advisable. Economics student also, I can tell you from my experience that economics students tend to do well in their MBA program. In fact, if you look, I'm not promoting by the way, but if you look at Chetan Bhagat's novel, Two States, and you will read in first few pages, you would figure out that economics was a compulsory component of any MBA program. So that is also a good avenue for economics students. So if you have questions, please go ahead, and I will be very happy to answer your questions. Okay, let me also take up another question that you have. Please tell about the final exam, and can we expect, as this is such a big course, that's why if you could tell something that is important, it should be focused upon how to prepare. I can tell you only thing that the way have prepared the question paper, that I have given equal weightage to almost all chapters. So there would be some questions that would be from your tutorial, that it's called tutorial or assignment. 25% question will come from your tutorial or assignment, and 75% from remaining. But that would, the first 25% would be to see your recall, and remaining 75% to see your understanding. So that's the only thing I can tell you about exam. Please send your questions through the chat box, and I would be very, very happy to answer you. So for Mr. Kashish Srivastav, he wants to know about PhD in economics. So PhD in economics, you know, you can explore different avenues again. There are several options. One, to think about Delhi School of Economics, to think about ISI Delhi, to think about IGIDR, or think about Madras School of Economics. These are conventional good places to do economics. Fortunately, we also have very nice PhD program in economics, and IIT being a Makkah for technology, the emphasis is on the science and technical part also. So to get into a PhD program, you have to write to get into a PhD program in India, you have to write the NET or UGC JRF exam, and if you are successful, then you become eligible to write these write the entrance test of these prestigious places. There is also an option of going out, doing your PhD from Europe or Australia or America. It all depends. For that, you will have to write an exam called GRE. That is, I believe, graduate record exam. Again, it all depends how well you do at your undergraduate level. What I want to say that at present, IIT-Kanpur offers really good PhD program. The advantage is that the kind of avenues available, the kind of data sets available, the kind of software available. We also have experts in different areas. And also, more importantly, the stipend comes on time. It's paid very regularly. So I would consider it is a good feature. But I also request you to ask this question to the TA because he's a PhD student and he would be in a better position to answer that. Sambhav Kumar has a question on a neutral good and Giffen paradox. What is a neutral good? So first of all, let us take that, we talk about good, bad, and neutral. Okay. What is a good? If consumption of that item increases, your utility, your level of happiness, your satisfaction increases. What is a bad? If the quantity of these items, such as pollution, increases, your level of happiness comes down. The neutral good, I would say, not neutral good, that's not the right term, just the neuter would be the right term, is to say which doesn't change your level of utility. Okay. And Giffen paradox is, again, Giffen paradox that we have learned is something to do with the magnitude of substitution effect and income effect. In fact, in one of the videos, I talk about Giffen goods in detail. Typically, what happens, the price of a good goes up, your consumption of that goods comes down. Now, that effect can be divided into two parts. When price of good goes up, your real income decreases because of that. Your purchasing power of purchasing power to buy any item decreases. So that you have to keep in mind. So basically, you are shifting from consumption of one good to another good. That is talking about the substitution effect. So that is always what happens. Price goes up, consumption comes down because of substitution effect. Now, the second effect is income effect. Income effect, what happens? It depends what kind of good we are talking about. Okay. Typically, what we have, income goes up, consumption of that good goes up. But that's not always the case. Sometimes consumption goes up, income goes up and consumption of that item comes down. Now, income effect can work in any direction, positive direction or negative direction. Substitution effect is always working in a negative direction. So now what you can think that when income effect is sufficient to counter the substitution effect, then we get the Giffen good, which is a theoretical concept. In typically life, we don't get it. What is a Giffen good? The price goes up, consumption of that item goes up. Okay. So now again, Sambhav has a question about internship and future opportunity at IIT or other prestigious institutes in India and abroad for economic students. So if you look at the beginning of the chat box, a link has been posted by by our support staff, and then you can it gives you some idea. If you do well, and you can in fact write to faculty members individually also, and if they find their your CV good enough, they will definitely give you some sort of internship. Of course, two things are important: not only that your CV is good, but also they have some sort of projects available to them. Next question is about what type of question will be given, MCQ or descriptive type. The question will be given mostly would be MCQ, not mostly, all the questions will be MCQ. Even the long questions would be given in the form of MCQ. You will have to solve a large question, and then 4 or 5 questions will be based on that, and you those 4 or 5 questions would be MCQ kind of a question again. Okay, so Sambhav Kumar has another question based. The question is that why do we often use Cobb-Douglas function? So Cobb-Douglas function first has a very nice feature. See, first of all, just let me give you some idea, and I'm not entirely certain that whether Cobb was a mathematician, one was a senator, one was a mathematician, and one was economist. I don't remember who was mathematician and who was an economist. One of them later on became a senator in US Senate, which is a quite prestigious position. So what they had looked at several industrial data, and they tried to fit a curve, and they were able to figure out that Cobb-Douglas is really nice way to fit this data. If you change alpha, of course, you alpha or beta, if you change alpha, you change the Cobb-Douglas function. So by changing alpha, you would be able to fit a curve, the production curve from different industry. And that is one reason that we use it. Second reason is that it is very convenient. Why do we study? Like, let me ask you, when you were in class 8th or class 10th, you might have studied mustard plant or some other plant. Idea was not to study just that plant, but idea was to understand the whole plant world through that plant. So one thing is that we are learning about production technology, and Cobb-Douglas is one way to understand. Third thing, that there was a very famous economist, Kenneth Arrow, and he had done much more extensive work than Cobb-Douglas, much later than Cobb-Douglas. And he came up with a functional form called CES production function. And CES production function, he has taken the Arrow and his co-authors. They had taken data from several different industry and from several different countries, and they were able to show that all these data can be explained using CES function. So Cobb-Douglas is again an example of CES function. So that is another reason that we study Cobb-Douglas function. Okay, so let me see if there is more question. No. So let me also add that Cobb-Douglas, typically if we take alpha is equal to alpha plus beta is equal to 1, then we get constant return to scale technology, which is also a very convenient thing. So if you can produce, let's say, you can produce, what CRS means that you can replicate the process. You double the production, double the input, and output would double. So that is another feature of Cobb-Douglas function, particularly when you take alpha plus beta is equal to 1. So another question is that about advanced course in microeconomics. If there is enough demand, I would be happy to offer an advanced level course in microeconomics. As of now, we don't have a plan to offer an online course on advanced microeconomics. Now, Kashish has a question: how can economics be helpful as a tool in the corporate world? So whatever you do in the corporate world, what are the things typically that one does? Finance, commerce, audit, all these things have economics as the basis. You know, all the basic, the concept of profit, the concept of cost are very fundamental to business world. So of course, understanding economics helps you understand the business world in much better way. Juin Chakrabarti has a question, sir. Can we use Lagrangian method to solve utility maximization problem? Of course. I don't, do we do it in the, so in fact, even during the course, in one of the videos, you would see that we do the Lagrangian techniques to solve the utility maximization problem. Of course, you can use the certificate obtained from this course as a line in your CV, and of course, I think it would help. So Ravi has a question about policy. Let me tell you, I don't think I have spent enough time on positive versus normative economics in this course. Positive economics is what is, you know, the status, the economic situation, and normative economics is something different, that what ought to be. Deliberately in Micro 201, we have kept ourselves separate from these policy question, because many of the, I don't know whether you are familiar with the debate in national newspaper. You will find economists on the both side of a spectrum, some supporting a policy, some opposing a policy, because a policy happens to be a more complex than simple textbook example, and by picking particular feature, one can find argument in support, and similarly one can find argument in argument saying that this policy is wrong. So there is another question which is more basic, and which is from the positive side. So let me take it up. What is elasticity of substitution? So two words, elasticity and substitution. We have learned both the words in this course, but perhaps not the elasticity of substitution. Or did we talk about elasticity of substitution also in the course? No. No. Huh? Okay. So let me just talk about what is elasticity. Typically, what we say, that if we change one parameter, then what is the change in the other parameter? Now, we also said that's not good enough, because the parameter can be measured in different units. So we said the proportional change in one parameter with respect to proportional change in other parameter is elasticity. For example, that proportional change in quantity demanded by proportional change in price is price elasticity of demand. So that is very simple. So elasticity should be clear. What is substitution? Typically, the world that we have taken in this course, that typically two goods world. So what happens if price of a good changes? If price of a good changes, then of course the relative price of both goods are changing with respect to each other. So how does this relative change in price changes the relative consumption of different items? And that's what is not exactly elasticity of substitution, but that's the basic of elasticity of substitution. Again, here also we have to bring the notion of proportionality. The proportional relative change in the consumption of quantity with respect to proportional relative change in price of the items would be elasticity of substitution. That is from the consumption side. One can also define the same thing from production side, that let us say you use capital and labor to produce something, and price of capital changes. So then there is a relative change in the price of capital and labor. So what kind of proportional change, this proportional change you have in the capital and labor mix to produce the same amount of good, given the relative price of capital and labor has changed. I hope that clears your doubt. And there was a video on direct benefit transfer and subsidy. So, sir, my doubt is, in case of direct benefit transfer, if receiver started to consume bad instead of good, no one would, no one would start consuming bad. The simple thing is that the consumption is a willing activity. No one is forcing you to consume anything. If it is good for you, then only you think of consuming. It's very much possible that your preference is messed up, and what many people consider bad, you may consider it good, and that's why you would increase its consumption. So that's a possibility. Is there a way to find Marshallian demand function from Hicksian demand function, or vice versa? So again, see, this is a very much theoretical concept, because Hicksian demand depends on the utility level. Unfortunately, your utility level is not known even to you. So Hicksian demand is a very much theoretical concept. Along the Hicksian demand, one can also think of, rather than doing the Hicksian decomposition, one can do the Slutsky decomposition, and the compensated demand that one obtains and then Marshallian demand that one obtains can be correlated to one another using the formula, Slutsky formula. So why are average preferred over extremes? It's not like why, see, there is a difference between engineering and economics. In engineering, because law is such, and that's why an object would behave like it. Unfortunately, we human don't. We behave because this is the way we want to behave. So some people can have preference who would prefer extreme over average. This notion takes care of the fact that most of the human beings prefer average over the extreme, and that's why we have the assumption of convexity. We don't say that convexity is essential feature of human being, but what we say that convexity is a kind of essential feature of Homo economicus, the human being represented in the economic model. So how economics of charity works, that's a difficult question for me to answer. That a cheap way to answer this would be that the person's preference is such that he derives utility when he gives away his wealth to others or needy. That's a shortcut answer I give you, but I don't have. There are complicated models available. Perhaps this person has an empathy towards other. He wants to help other. So it's part of his preference that giving away gives him utility. So Sambhav has a question that how same level of utility will be achieved when the price of one good changes and other remains same. So of course, in reality, his utility would change. It would not remain the same. But for the Hicksian or Slutsky decomposition, we create an artificial construct by shifting, by imagining a change in income or a change in purchasing power. And we bring that person back to the earlier level of utility theoretically by an artificial construct, not that in reality it happens. So remember, Kashish, that the same, if you pay attention to the indifference curve, at any indifference curve in the continuous setting, we have infinite number of bundles. If you are increasing the amount of one bundle, you have to decrease typically the amount of other bundle to bring you back on the same level of utility. So consumption, so having the same level of utility doesn't guarantee anything. Particularly in your question, that same level of utility can be achieved through different combination of bundles. No, Shambhav, we will not cover the distribution. That's not part of this microeconomics one. That could be part of microeconomics too, but we are not talking about microeconomics too. See, after BTech, particularly if you have done BTech in computer science and engineering, then there are a lot of avenues which can combine, which combines computer science and economics knowledge. These days, mechanism design, game theory is becoming quite important for computer scientists. Same can be said for electrical engineers, particularly power system engineers. And a lot of market reform is going on in the electricity market, and that's why economics has become quite important there. Transportation economics for civil engineers, it combines economics as well as the engineering discipline. So these are the some of the areas that I am aware of. But you should also explore other possibility if you are not from these branches. So Kashish, tax is never shared between producers. That the tax burden is shared between producer and consumer. And that I think we have done in lecture 29 or 30. You will have to refer it to. I think we have given some examples there. Uh, for electricity, what happens typically, demand curve is almost vertical. Almost vertical, I say, which means it's very inelastic. Even the price goes up, we are willing to consume the same level of electricity. That's what it means. So after certain price becomes very high, affordability becomes an issue, and then of course, the demand quantity demanded comes down. Ankit, that question I cannot answer because I don't organize the exam dates. Uh, you will have to, I think, someone should post a link, or someone from the NPTEL MOOC office should answer this question. This is an administrative question, and I will ask the TA to figure out, find out, and let it know. Hmm. So, John Nass, if you think about when we are doing perfectly competitive market, we are not thinking of the effect of one producer or one consumer would have on the market. What we assume that a producer, one particular producer or one particular consumer, is insignificant in comparison to the whole market. Uh, John Nass came up with a theory called game theory, and he talked about how to take care of scenarios when I need to, my payoff, my utility doesn't depend only on my action, but also depends on what others do, on others' action. That is also true for others. So others have to think about, let's consider a two-person scenario, I and you. My utility, let us depend on not only what I do, but what you do. Not only what I do, but also what you do. So I have to think about what you are thinking. Similarly, you have to think about your utility depends not only what you do, but I also do. So you have to think about what I am going to do. So such kind of scenarios cannot be taken care of in classical economics. John Nass came up with the techniques to consider and study such scenario. So that is the immense contribution of John Nass. So again, Kashish, as you know, this is first basic elementary course in economics. So when we talk about two good world, we are talking about a very simple world. World is much more complex. Of course, there are n goods, n being a very high number. But we cannot bring all the complexity to understand the basic concept. So that is perhaps the reason that we always use two good world, to understand the notion, the concept involved in microeconomics. So idea is never, so there was a very famous economist by name of Milton Friedman who talked about that don't judge a theory by how realistic it looks. So let me give you this example, and I think I have given it in the videos also, that Sachin Tendulkar doesn't know anything about the law of motion or projectile motion. Okay, he doesn't think about gravity, he doesn't think about the angle, he doesn't think about the speed. Maybe he thinks about, but not in the way a physicist would think. But still he is able to hit the ball successfully. But if a physicist wants to study his behavior, then he has to consider Newton's law of motion, and Newton's law of motion would be able to say a lot of things about it. So again, that's the way it happens, that don't judge a theory based on how realistic it looks. If you are using a theory which gives you answer without becoming very complex, then that theory is really a good theory. So that is the approach we have. So somehow agriculture, of course, agriculture, as we know, that goods are homogeneous. Most of the goods are homogeneous, and agriculture, most of the basic agricultural produce, at least like rice, maize, wheat, they satisfy the condition of a perfectly competitive market. So of course, in that case, we have figured out that the producers would not make any economic profit in the long run. But it doesn't mean that they would not make accounting profit. They would make accounting profit, but that's not going to be anything special. It's a very normal kind of accounting profit that they would be making. And of course, it translates into, because when we are talking about economics, we also takes into account the opportunity cost, and which brings their economic profit down to zero. उसको बोलिए मुरली को कुछ प्रॉब्लम है, Okay. Was it going okay, Murli?
Yes, the event is going live, sir.
But here this is frozen now. For last.
Okay, sir. But you are live only, sir. I am able to see you, sir.
Okay.
Yeah. So internet is there, sir. Yeah.
Okay.
You are live only, sir.
Okay.
Yes.
Okay, so there is a question about rationality. Rationality is same as selfishness. No, rationality is not same as selfishness. Rationality, the way we have defined, at least in this course, is very simple. That your preference is complete and transitive. Reflexive can be taken care by these two properties. So basically, your preference is complete and transitive. Complete means you are able to decide. There is no confusion in your mind. Given the choice between two objects, you are able to say, I like A better than B, or I like B better than A, or I am indifferent between A and B. And transitive is that if I like A better than B, B better than C, then I like A better than C. That's what the rationality means to us. Nothing more, nothing less, at least in this course. Selfishness, one can be rational and be very selfless, in the sense that my preference is that I get happy only when my brother is happy. I don't care about myself, which is, it's complete in the sense that when my brother decides A is better than B or B is better than A, I'm able to decide following my brother. Similarly, If my brother is rational, I'm rational because I like my, my preference is very simple based on my brother. So it has nothing to do with selfishness. It can very much be built into your preference that you are not selfish. So Sambho says that there is no internship for economics. So I will ask the again NPTEL or MOOC office to figure it out. And if not, then I will ask my TA to talk to me and post some details on internship availability.
Times of India tops from India Today top stories at 5:30 p.m. today.
At what point microeconomics and macroeconomics converge? That's, they never, in a way, because microeconomics is study of individuals and macroeconomics is study of aggregate. But the thing is, now these days there is a movement in macroeconomics that if something is true at aggregate level, its justification must be found at individual level. So what people are talking about is microeconomic foundation of macroeconomics. So, but it doesn't mean that they converge. They say that in economics, everything has to be explained based on microeconomics. So individuals are the units. Like for chemistry, I would say that atom, but now even not atom, electron, proton, and neutron are the basic. Even people have gone beyond that. But in economics, we talk everything at the level of individual. So Kashish, I talk about profit maximization and cost minimization to learn about technique. I'm not saying that should be the focus. Instead of one can say that the producer is not interested in maximizing in profit, but he's interested in maximizing revenue. So revenue maximization is the goal. Like you are saying that environmental protection, that can be the goal. What we are talking about through these things, if you take a very agnostic view of this, then the intention is to learn about the technique of optimization, constraint and unconstrained optimization. Now it's up to you the way you want to optimize it. So that's one answer. Of course, economists get blamed that you talk about profit maximization and cost minimization so much that you ignore environment. But that's in a way true, but also not true in other way. Sambhav has a question, paradox of thrift. I have difficulty recalling the paradox of thrift. I have not, perhaps in macroeconomics, but not in microeconomics. But let me check. I will. Lecture number you can ask. So someone is, Juin is talking about monotonic transformation, examine utility function. In utility function, we talk about monotonicity at two places. One, we are talking about the property of preference, the monotonicity, not monotonic transformation, but we are talking about monotonicity. What it means that more is better. I prefer more over less. Okay, that's what the monotonicity is there. Second, we are talking about monotonic transformation of utility function. So what we say that a utility function is not unique representation of your preference. So let us say that I have 5 different bundles and I have on a rubber, I mark 5 different bundles and I stretch that rubber differently. Stretching means transforming it. If I am transforming it monotonically, means that we are not changing the order. Okay, then still we are getting the same ranking. So preference is all about ranking. While utility function always gives us a number, but number is not that important. What is important is that you take 2 numbers and compare them. Whichever is higher gives you higher utility. So if a higher number gives you, let's say if you are comparing 41 and 40, then there is another transformation of this utility function, which makes 41 91 and 40 80. Still the order is maintained. So monotonic transformation maintains the order. It doesn't change the order. And that's why we say that any monotonic transformation of utility function would also represent the same preference. So Kasis, what is a question there? I don't see a question that there is a conflict in a panel of policy making when industrialist and treasury of common exist by social activist. So again, we don't get into this in this we don't get into the details, and this is we have just started scratching the surface of economics. If you take slightly advanced course or do another MOOC course that I have on game theory, strategy and introduction to game theory, there we talk about bargaining very little bit. So of course, different parties are involved. Um, their interests are not aligned. They are contradicting one another. So of course there is give and take, and there would be bargaining. And that again, someone was asking about John Nass's contribution. So John Nass has a theory there which talks about these sort of scenario. No, typically, Kasis, we cannot have upward sloping demand function. Giffen good can theoretically have upward sloping function, but so far no one is able to convince us economists about the existence of a Giffen good, a real Giffen good outside the textbook. It doesn't exist in the real world. So no, demand cannot be upward sloping in reality. Sambhav, I will try. Let us see if there is any more request. We will see if we can do advanced macroeconomics course. It is applicable. In fact, one of the first thing one learns in macroeconomics is ISLM curve. And there you will learn about aggregate demand and aggregate supply. So I'm not saying that it is a merger. That's again the macroeconomic foundation of macroeconomics. So we are taking the help of microeconomic tool. You can also say that it's the way it is said in economics that we are talking about foundation of macroeconomics rather than it's a convergence. The problem is that many aggregate phenomena cannot be simply obtained by adding up, individual. Of course, demand and supply, we can do that, but there are many places where we cannot simply do this sort of addition. But of course, the attempt is to figure out how to do that. Kashish, again, I think this question would be better for a macroeconomist. In case of saving, if all saves net effect is either less or same. Again, I have to think, and it's a long time I have done macroeconomics, so I suggest that you ask this question to a macroeconomist. I don't think economists always say that supply will create its own demand. That's the newspaper line. Sounds like a newspaper line. We economists don't say that supply would create its own demand or demand would create its own supply. That never happens. But basically, you think, what is supply? Supply is somehow a representation of technology. So a new technology is coming up, a new supply is coming up. People experience, they realize that this is better, and then it creates the demand of that item increases. So that's what people mean when they say that supply would create its own demand. But that's not a very mathematically precise term. The way we are doing things in microeconomics, I would not be making this sort of statement. The methodology of economics are twofold. One, what you see in microeconomics, the static optimization. Then what you see in macroeconomics, which is dynamic optimization. And there is a third thing, that in econometrics, you look at the data and how to interpret. There are a statistical tool that you need to learn to interpret that data. So these are the three different sort of methodological tools available to an economist. People have started studying irrationality in economics. But again, it is on fringe. It is still not very mainstream. There is a branch of economics called behavioral economics, and behavioral economists are interested in studying the variation or lack of rationality. So there is a very famous book, although not a technical book, but that's a good point that you can read it, called Irrational Exuberance, written by Robert Siller, who was given Nobel Prize also for his contribution to behavioral finance. Satiation and bliss point. So rather than sometimes no satiation, like one can think of local non-satiation, that your simple thing is that your stomach is not full, you are not satiated. Okay, so that's what no satiation. Satiation means you are satisfied now, nothing more is required. If nothing more is required, then it takes you to the bliss point. You have achieved, in a way, this is just the name, that you have achieved nirvana. You don't need anything more, and that is in a way that you are satiated, and it's a bliss point. Okay, but this is just a metaphor to talk about it. So see, Kassis, this is a perennial question that many people have. There was a Nobel laureate, I think, I don't remember the subject. It was peace or chemistry, but his name was Paul Ehrlich, or maybe medicine. I don't know. He was a geologist, I think, from Stanford University, and he wrote a book about a population bomb in 1968-69. He had come to Delhi for a conference, and the number of people he saw, he got scared that how can we feed all these people, and so we are all going to get wiped out because there wouldn't be enough. So he predicted that in next 10 years this population bomb would kill all us off. But that has not happened. Even a Nobel laureate was wrong. But Paul Ehrlich was not the first one to talk about it. Even the Malthus, one of the first economists, also was worried about it. What happens that when we are talking about demand, this problem, we are not thinking about the changes in technology. Before, think about if you are thinking of a food, think of a green revolution. How did it change the level of supply? The same amount, same area is able to feed more people. So if demand is increasing, that's also right. But supply technology also catches up. Sometimes technology is ahead, and technology is always enhancing the supply. So again, Ravi, that's what I explained, that's what the Say law is. The supply creates its own demand, that the technology brings out new product in the market. But that's not, so remember, Say's law is not a law in the sense that the gravitational law is, that everywhere it would be followed. Say's law, in economics, we don't have such a strong thing. We say law of demand and supply, but even these things are not law in the strict philosophical sense. So in economics, we don't have laws like that. So that's what I was trying to explain. So Kashish, when we talk about more is better, we are talking about monotonicity, and we know we don't include bad there. And we don't say that it has to be satisfied. What we say, remember the way we had gone about it, we talked about first rationality, then we talked about other axioms. So we say when these axioms are satisfied, it's much easier to talk about it because mathematically we get very nice formulation. But it's not that we cannot study them in economics if these things are not satisfied. So it's not that always more is better, but what we say, when more is better, then monotonicity property is satisfied, and then the life is much more simpler to deal with such a problem. But no, it's not always true. We don't have laws that we follow. We have our own behavior, and we economists try to figure out that how these behaviors can be classified and studied. So this is in general true that more is better, but we never say, because think about the scenario when we discussed the local non-satiation and we talked about the bliss point. We didn't say there that more is better. So it's good interacting with you guys. If you have more question, and if it is felt like that I should do more live session, please post your request in the forum, and I would love to do more live session with you.
Any questions, sir?
There could keep on
It's
coming.
time, sir. You can,
So that's why I already told them
okay, sir.
that we can, if there are more questions, they can post it in the forum, and we will try to answer them. And if there is really a lot of interest, we can do more live session. I have no
Sure,
problem.
sure. Yes.
So thank you. Thank you.
Conclude, sir.